Hi, Harry here on July 24th, Friday. Now, you know we were looking for potentially a top of all tops, a major top, the top this week. A number of indicators that I put out in my early edition of the HS Dent forecast, which came out on Tuesday. We're saying we're looking around 21st to 23rd was the optimum time for a top, might stretch a little longer. Well, from the 21st to this morning, the 24th, the NASDAQ has fallen 600 points approximately. That's a big deal. What's a bigger deal is the NASDAQ is leading this correction instead of the other indices, which it used to be more the small caps would lead on the way down. Now, they'll do poorly in the end as well, but I expected the NASDAQ to lead this because the futures traders, that volatility index on the NASDAQ that we were talking about in the August issue, was saying they're the most skeptical of the NASDAQ and NASDAQ 100 right now. So this is looking good so far. Why is this top important? Obviously, for us to see this and be able to get out of a bubble near the top, even we got out earlier this year, this is all of these have been good selling opportunities. And profit from this in the downturn, because there is a pattern to these downturns and it continues to follow it. This top is coming 4 months into the rebound from the 40% crash, right in the middle of the tech wreck in 2000, 2002, and the big 90-year cycle bust in late 1929 to late 1932. So those first bounces. So it is following a pattern, and the next pattern is things go down for the next 2+ years until we bottom. And again, today, if I had to call a bottom on this whole downturn, I would call it around December 2022, just by past cycles. So yes, we can take advantage of this. And I'm telling you, I'm looking at the chatter out there in the news. I'm not seeing many people talk about this as the top. There's been some billionaires and big traders warning generally. So this could be important. I have an ulterior motive on this. I want this damn bubble to burst. This is the greatest mirage illusion, created something for nothing in history. We've got Ray Dalio, I'll show this next week, has a great chart showing every time private debt peaks and starts to deleverage, that's when they started to do minor money printing, QE, in the early to mid 1930s. Well, this one's off the charts. And we delevered then big time private. We're not deleveraging this time, and I expect that to happen in the next 2 to 3 years. We finally delevered this debt. We finally delevered these bubbles because they are totally distorting our economy. What has happened here, and make no mistake about it, and I and many people like David Stockman have talked about this for years and years now, that central banks took over the free market capitalist system. We will no longer have free markets. We will set short-term and long-term rates. We will push markets up. We will not let markets go down. We will not let the economy go into a recession or depression and deleverage. This is insanity. This is the worst thing ever done in economics since the South Seas bubble, and that was minor, only affected small amounts of rich people. So I want this to happen so we can restore free market capitalism. This downturn with such income inequality is also going to restore democracy. So we've had basically special interests take over democracy in this bubble boom, and central banks in the late stages take over free market capitalism. We need these things to come back stronger than ever. The internet, this bottoms up world, even the potential of cryptocurrencies and blockchain, more importantly, allows us to have even stronger bottoms-up democracy, free market capitalism, the invisible hand. If we can just get these damn douchebag central banks out of the way, get out of the business of manipulating the economy and thinking they're God and smarter than the invisible hand and the collective intelligence and innovation and spending habits of people who actually drive our economy. So I've got a big ulterior motive here. I want this crash to happen. It is the greatest opportunity to expand wealth of any time in history, as the early 30s particularly were on this 90-year cycle, which is the primary cycle. You look at the stock market since its inception in the late 1700s and stock exchanges, the only thing that stands out on that long-term chart is the 90-year cycle and crash. The other thing that stands out particularly since World War II and the first middle-class generations and then the giant baby boom is a 40-year generation cycle. That 40-year cycle is bottoming 2020 to 22 to 23, and this 90-year cycle is hitting late 2019 to late 2022 for the markets. This is a bigger convergence of these cycles than even the early 30s, and then the other 90-year cycle, 1836 or 37 into 1842. So this is a big deal. I'm hoping we called it right here. You have to take your best shot. I did it. A lot of technical indicators came together only in the last few weeks. That's why I put out this August issue early. And I tell people the last time I had a turn point this strong was in early October 2002 at the bottom. And we called that bottom right to the week in the newsletter of the tech wreck. This looks like a top to me, and if it is, we got fireworks getting ready to go off, particularly in the first real crash at the top of the NASDAQ. The other markets already had their 40%. So there should be a big crash in the next few months to follow this. So stay tuned.